Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into the ALP's landslide federal election win and what stocks to buy or avoid amid the outcome. Prime Minister Anthony Albanese and the Federal Labor Party achieved a remarkable victory in the 2025 federal election, securing a second term and the ALP's strongest vote since the Curtin era. The result also delivered a crushing blow to former opposition leader Peter Dutton, who lost his seat of 24 years to a member of the ALP. Mr Albanese became the first Prime Minister since John Howard in 2004 to win a second consecutive term in office, in a victory Magenta Advisory's Andrew Thomas told AusBiz was unprecedented.
Quite extraordinary in a way. For Labor, you have to go back to John Curtin, who was in 1943 was in wartime government, to see a higher 2PP vote for the Labor Party. And there's only been two subsequent elections where the Liberal Party have achieved a higher 2PP vote, and they were Menzies in 66 and Fraser in 75. So that means this result for Albanese in terms of the 2PP is higher than Hawke got in 83, higher than Howard got in 96, and higher than Rudd got in 07. So it gives you a sense of the magnitude of this.
So what stocks are set to benefit under a second Labor term? The ALP's key policy planks linked to housing supply, expanding the Medicare system and renewable energy. Labor is aiming for 82% of Australia's electricity to come from renewable sources, which are solar, wind or hydro, by 2030. Macquarie expects Australia's largest energy retailer, AGL, will be a key beneficiary of Labor's proposed $4,000 per household battery subsidy, which could help stabilise electricity prices. Brokers are overall positive on AGL, with an average target price of $12.20 and a median buy recommendation. The battery technology firm Novonix is aiming to revolutionise the global lithium-ion battery industry with innovative, sustainable technologies. ASX TradeWatch data showing Novonix shares are in a near-term rally. Morgan Stanley analysts point to potential upside for Ramsay Health Care, with the health minister indicating he'd like private insurers to increase the claims ratio paid to hospitals. They've upgraded their price target on the stock by 3% to $37.20 a share. UBS is neutral with a target price of $38.50, suggesting further 10% upside for Ramsay Health Care. Labor's $10 billion plan to build 100,000 homes over 8 years exclusively for first home buyers could boost shares in developers. Macquarie analysts have an outperform rating on Lendlease with a $7.24 price target. UBS in March recommended shareholders sell the stock. Kai Chen from MPC Markets favours Goodman Group in the REIT sector for growth, while he prefers Stockland to Lendlease, saying they're more stable in their structure and more focused on residential housing.
More on the safer side, in terms of development pipeline, they've got about $15 billion worth of pipeline over the next couple of years. So, there's going to be continual work to come from that. They've improved their efficiency as well, which is reflected on their net profits. But, again, I don't think this is one of the growth stocks in the REIT sector. My favourite is still Goodman.
With Labor's push towards net zero targets and clean energy, thermal coal and high carbon producers could face headwinds. Whitehaven coal shares are down 21% year to date, while ASX TradeWatch data show little demand for the stock amid the recent weak price action and with its 200-day moving average sloping downwards. Analysts say EV demand and the push for cleaner energy could also affect automotive parts suppliers like ARB. UBS is most negative on the stock with a sell recommendation and $34 price target. Meanwhile, the Australian Shareholders Association has cautioned that private health insurers may come under margin pressure if premium indexation is scrapped. NIB is up 25% year to date and is currently trading on a PE ratio of around 20.5. Deep data analytics Mathan Somasundaram recommends holding the stock at current levels but calls it too expensive to buy.
Multiples are not cheap. The yield is below bond yield. So you're not there for the yield. You kind of have to be there for the growth. And I don't see huge growth. This is not a massive growth machine. So you buy these stocks when they're beaten up and nobody wants to touch it. It's not the case at the moment.
And finally, ST Wong from Prime Value Asset Management says ultimately the broader macroeconomic environment will have more of an impact on the ASX than the outcome of the federal election.
Your eyes towards a horizon, think longer term and look for ideas that way. And that's pretty much how I've been positioning into this environment.
And that is your IG Macro Intelligence for this week. We'll see you next week.